Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 10th, and we are going to take a look at the VIX, Dow Jones, S&P 500, and also Nasdaq. Let's start with the VIX. So when VIX is going up, the stock market tends to go down and vice versa. So VIX is down 1.38. That's 6.28%. That's a big move down. We closed at 2058. Let's look at what this looks like on the chart. So we are into this bullish channel. So the VIX tends to go up. It tends to go up. On average, it tends to go up. Have I said it often? Tends to go up. Yes, sometimes it does this, goes up and down, goes up and down, goes up and down, but it tends to go up as a whole. So the stock market tends to go down as a whole. And it tends to go down as a whole. It tended to go down as a whole since December. This is an indication of why right here. So, but for the last couple of days, we have had big move down with the VIX. Last Friday, a big move down. Yesterday, it was nothing. Today, also a big move down. So we are coming very close to the support of our bullish channel. If we break that support, then this upward trend for the VIX is going to be broken. So the tendency of the stock market to go down will break also. So this is why it's very important to take a look at this pattern right here. So we broke the support today. We closed a little bit lower. We like to get a second candle when we have a break, just to confirm that it's just not a fluke. Because sometimes you get a fluke. You get one candle outside of the channel, and then the second one comes back in, and the trend continues. So we just need to be careful here that this is not what is happening. But this red candle today had an impact on the stock market. Let's look at the stock market. Let's look at the indices. Let's look at Dow Jones outside of its downward channel for a third day in a row. So this is telling us that things seem to be stabilizing outside of this downward channel. In order to have a move up on Dow Jones, we would like to see a break in this resistance right here. We would need to break 33,816, and we need to get a good stochastic over 60. The stochastic is getting there. Stochastic is at 52. So, I would not be surprised that within 1 or 2 days that we could break this resistance right here and then continue on. But this has not happened yet. This has not happened yet. But this is what I would like to see in order to change my outlook of the stock market from a little bit of a move down that we had in the past month to at least a sideways move, if not a little bit better. Let's go look at the S&P 500. The same thing right here. So we have a break of our horizontal resistance. So S&P is a little bit ahead of Dow Jones in that regard. And we have a at 46, not yet 60, but getting there. It's climbing up. It's climbing up. So S&P is in a better position than Dow Jones in terms of the pattern. And last but not least, Nasdaq Composite. Well, look at this boy here. Look at Nasdaq Composite. This was the congestion zone right here. Broke fiercely yesterday, but then were squished down by this downward resistance. Now, big green candle, but we are right smack on that resistance. So this is very, very close to showing us that something different is going to happen for a Nasdaq. We don't have yet the stochastic over 60. So I would not be surprised. I don't know. I would not be surprised that we have a little bit of a move down at some point, maybe to this support right here, and then another move up, this time with a good stochastic. And then at that point, all of our criteria would have been met. And then the chances that the move is going to continue would be a little bit higher. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.